Put this in some context. Obviously, the administration walking halfway back on this idea that they're considering these investment limits or delisting actions. What does that mean, do you think, for the way these negotiations might proceed from here?
So the context is important here. About 2 weeks ago, there seemed to be some progress on both sides in terms of finding a way to move forward on the negotiations. And then about 10 days ago, Trump made a very harsh statement about the U.S. not needing a deal and China being much more desperate for a deal. And then more recently, of course, he's talked about getting Chinese firms listed on U.S. stock exchanges to be forcibly delisted. So that certainly raises the temperature in the negotiations, and it makes it much harder to find a way forward because the Chinese now are much more loath to make concessions because they know it could be pulled back on the basis of a presidential whim.
So, I mean, I guess the upshot there is that these talks that are beginning in October do not look like they have a high probability of making much progress, Eswar?
No, certainly these recent sets of remarks are going to add a very hard edge to the negotiations, and it's going to make the Chinese much more circumspect about making significant concessions on their side if there is a feeling that after the Chinese make concessions, the U.S. might either raise the bar or take further retaliatory action. So it certainly makes the path to a negotiated settlement that much harder. The Trump administration has also sort of made the point that China trying to run out the clock in 2020 might backfire if, in fact, this administration stays in power. So Trump has made that threat as well. So it certainly doesn't set a good basis for these negotiations to succeed.
Kirk, how does this play into your market outlook? How much does the market need some kind of progress on trade, or at least no further escalation? And what does it mean for the Fed and and the economy itself?
Well, I think there are a lot of issues there. I think the market highs in the year will still be the highs at the end of the year. I think you don't change your investment outlook, but certainly any kind of restrictions on global listings or the U.S. ability to invest in China, is not good for the markets. So we'll have to see. I tend to think this is all posturing for the trade negotiations. I think there will be some deal, especially protection of intellectual property rights. And I think the big question here is what's going to happen to the dollar, because the dollar is driving a lot of this. And interestingly, the more you have trade tensions, the dollar just continues to be strong. So I think that's something to keep an eye on.
Kirk, are you saying that investors should not really be paying too close of attention to the daily headlines, at least insofar as it changes their portfolio strategies?
I think you have to look through it. I think it's very difficult to trade this. There's so much uncertainty. I think if you're betting, I would say there will be some kind of deal which will be positive, but I don't think it's going to be any kind of global macro deal that settles all the issues. And I think China is probably playing a waiting game, and we'll wait to see what happens a year from now. The other issue I would say is China has a lot of pride here. Huawei and companies like that are a source of great national pride. So there's a lot of issues here at stake.
So, Kirk, just to follow on your idea that the highs for the year are probably in, do you see significant downside risk? I mean, what plays into this idea that maybe the market is going to be capped here?
Well, I don't think the market can go down too much here. The U.S. economy is strong. On the other hand, I think it's hard to argue that rates are going to go up. That the market's going to go up. I think you have to worry about interest rates going up, and you have to worry, what's going to happen in terms of our multinationals with a strong dollar. So I think it's going to be very hard for companies to continue to put up the earnings growth that they've put up, and that therefore I think the July highs are where we're going to end the year.
And Eswar, just finally, we did get some economic numbers out of China overnight that were a little bit better than expected. How does the current path of the Chinese economy play into all this?
The Chinese economy is certainly slowing down, but it's obvious that the Chinese government is hardly in panic mode. And there are some indicators that have come in somewhat more positive than expected. There has been some fiscal and monetary stimulus, some tax cuts, a small interest rate that the government has put in place, but they have a lot of room in reserve with both monetary and fiscal stimulus. So they seem to be quite confident they can ride this through. And if the economy starts slowing down, they have a lot of room to boost up the economy with macroeconomic stimulus.
Hey, Eswar, we've been awaiting the 70th anniversary of the modern government for a while. The argument's been out there that given the level of pride in China regarding that date, that it makes Xi less likely to want to appear to be giving in to anything. Is that overstated?
I think certainly the Chinese are not willing to be pushed around anymore. The anniversary plays into it in some significant way, I suspect, but the overall issue is that China does not feel that it's going to make concessions and that it has to make concessions in order to keep its economy going. It hurts the economy if the trade war continues, but they're not going to bend over and make all the concessions that the U.S. seems to want from the Chinese side.